It's Monday, April the 27th of 2026. You're listening to the DX Today AI Daily Brief. Today, OpenAI ships GPT 5.5 with full agent mode. China's DeepSeek drops a preview of its V4 flagship. And Alphabet commits up to $40 billion to Anthropic. Let's get into it.
OpenAI shipped GPT 5.5 on April 23rd, calling it the company's most intuitive model to date. The release brings stronger code, research, and agentic capabilities, and rolls out an expanded agent mode for ChatGPT Pro, Plus, Business, and Enterprise users. From the tools dropdown, subscribers can now hand off multi-step tasks like analyzing competitors, building slide decks, or running calendar workflows. OpenAI also launched a biobug bounty for the new model, offering a $25,000 reward to the first researcher who fully bypasses its biosecurity guardrails. The company says GPT 5.5 is its biggest swing yet at fully agentic AI, and the rollout is now live globally.
Now to China.
China's DeepSeek dropped a preview of its long-anticipated V4 series on April 24th, with two flagship variants. V4 Flash carries a 1 million token context window for long document workloads, while V4 Pro is positioned as a top-end open-source competitor to OpenAI, Anthropic, and Google. DeepSeek says the model delivers major upgrades in reasoning and agentic execution and pairs tightly with Huawei's new SuperNode hardware to sidestep US chip export controls. Pricing is aggressive, with the company aiming to undercut Western frontier labs by an order of magnitude. A year after rattling Silicon Valley with V3, DeepSeek is again forcing the industry to reassess what an open-source model can do.
Capital flows next.
Alphabet announced on April 24th that it will commit up to $40 billion to Anthropic, deepening one of the largest capital relationships in AI. CNBC reports the deal layers an immediate $10 billion tranche on top of Google's existing investment, with another $30 billion tied to performance milestones. The move comes as Anthropic ramps up consumption of Google's Ironwood TPU chips and pushes its annual recurring revenue past $30 billion. For Google, the commitment doubles down on a hedged strategy of competing with OpenAI through both its own Gemini models and a major equity stake in a rival lab. For Anthropic, it secures the compute needed to train Claude's next frontier generation.
From Wall Street.
Instacart co-founder Apoorva Mehta launched Abundance, a hedge fund where artificial intelligence agents run the entire portfolio. Bloomberg reported the fund's debut on April 24th, with $100 million in seed equity backing the Palo Alto firm. Inside Abundance, thousands of AI agents scan the internet for trade ideas, conduct fundamental research, build long and short positions, size bets, and execute orders. A 10-person human team of quantitative researchers, engineers, and AI specialists builds and tunes the underlying models. Mehta says he was inspired by OpenAI's O3 reasoning model and now believes generative AI is ready for capital allocation. The fund is currently trading its own capital, with plans to open to outside investors.
On to Big Iron.
Meta and Amazon Web Services confirmed on April 24th a multi-year deal that will see Meta deploy millions of AWS Graviton processors to power its agentic AI infrastructure. TechCrunch reports the agreement covers tens of millions of cores over the life of the contract, providing Meta with a CPU complement to its existing GPU fleet. The deal is significant because Meta has typically built its compute internally or sourced from NVIDIA. Bringing Amazon's custom silicon inside its stack signals both a deepening cloud relationship and a desire to diversify supply. For Amazon, landing one of the world's largest AI compute consumers as a Graviton customer is a major validation of its in-house chip strategy.
Workforce news next.
Microsoft is offering its first-ever voluntary retirement program, with buyouts extended to roughly 7% of its global workforce. The plan was reported in late April, alongside a broader wave of AI-driven restructuring across big tech. Microsoft has not specified which divisions are most affected, but executives have signaled that AI tooling is reshaping roles in software testing, support, and routine engineering. The move comes as Microsoft pushes well past $100 billion in annual AI and cloud capital expenditure. Combined with parallel cuts at Meta and Snap, observers say April is shaping up as the worst single month for tech employment in the post-pandemic era, with AI cited as the primary driver.
More cuts coming.
Snap chief executive Evan Spiegel told staff late last week that the company will cut about 1,000 jobs, citing rapid advances in AI as the catalyst. The restructuring is expected to deliver more than $500 million in annualized cost savings by the second half of 2026. Spiegel framed the move as a response to AI agents collapsing the cost of tasks that previously required large engineering and operations teams. Snap will reinvest a portion of the savings into its own AI roadmap, including augmented reality and conversational features inside Snapchat. The cuts add to a tech industry layoff tally that has now passed 92,000 in the first 4 months of the year.
Funding rounds next.
AI coding company Cognition is in talks for a fresh funding round that would more than double its valuation to $25 billion, according to Bloomberg. The Devon developer is seeking hundreds of millions of dollars in new capital, with a pre-money valuation exceeding $50 billion. The discussion comes as Cognition's autonomous software engineer continues to win enterprise contracts in finance and infrastructure. Investors see the company as one of a small handful of credible challengers in the agentic coding category, alongside Cursor and Anthropic's Claude Code. If completed at the proposed valuation, the round would place Cognition firmly in the top tier of pure-play AI unicorns and underline the premium investors continue to pay for autonomous coding capability.
Inside the lab.
Anthropic published findings on April 25th from an internal experiment called Project Deal, in which Claude agents were turned loose to negotiate real workplace transactions. Across 69 employees, the agents struck 186 deals worth more than $4,000 in aggregate, ranging from office swaps to consulting hours. Anthropic's larger Opus models consistently extracted better terms than the smaller Haiku tier, with the gap widest on multi-issue negotiations. The research is positioned as evidence that agents can be trusted with low-stakes commercial decisions today, and as a roadmap for higher-stakes applications. It also serves as marketing for Claude's enterprise workflow ambitions, where Anthropic is pushing aggressively against OpenAI for procurement and deal flow use cases.
Now to Washington.
The U.S. State Department issued a directive in late April ordering all U.S. embassies to formally warn allied governments about AI intellectual property theft tied to 3 Chinese model developers. Cables reportedly named DeepSeek, Moonshot AI, and MiniMax as priority concerns, citing a pattern of training data scraping, talent poaching, and suspected exfiltration of frontier model weights. Embassies have been instructed to brief host nation industry ministries and to encourage tighter export controls on advanced chips and tooling. The warning lands the same week DeepSeek unveiled its V4 model and reflects rising concern in Washington about the speed at which Chinese open-source releases are closing the capability gap with U.S. labs.
Healthcare next.
Healthcare AI company Lumeris on April 26th launched native audio for Tom, bringing real-time conversational AI into its primary care as a service platform. The feature lets clinicians dictate, query, and document patient encounters through natural voice interaction, with Tom serving as an embedded clinical co-pilot. Lumeris says native audio cuts charting time by capturing the full encounter without copy-paste workflows and integrates directly with existing EHR systems. The launch lands inside a wave of late April clinical AI announcements, including OpenAI's GPT Rosalind for biotech research and a new HealthBench professional benchmark for clinician-facing models. Together, they signal a shift from generic chatbots to specialized, regulated AI tools designed for the realities of patient care.
Closing with robotics.
Sony AI detailed Project ACE, a robotic system the company says is the first autonomous platform competitive with elite and professional-level human table tennis players. The findings appeared on the cover of Nature, with researchers describing how the system fuses high-frequency vision, model predictive control, and learned policies to track and return shots in real time. Project ACE beat advanced amateurs and held its own against professionals across long rallies and varied serves. Sony positions the work as a milestone in physical AI, showing that robots can now operate at human reflex speeds in unstructured settings. The team says the same architecture could transfer to manufacturing, surgical assistance, and other domains demanding both speed and precision.
That's your briefing for Monday, April 27th of 2026. For DX Today, stay curious.